This is the third session, and I think I'm done with trying to apply the step 1 to 3 on the DXY. So what I can conclude with is that I think we've been able to establish the trend, who is in domination. We've established one important area of interest that aligns with the trend. And currently, we are seeing entry confirmation in terms of evening star and this head, this head and shoulder formation. This head and shoulder formation. Okay. So with that, I can confidently say that all the 3 steps we've learned have been applied. Okay. So this means that um, we can confidently sell this pair. Okay. But we don't normally trade the DXY. Okay. The DXY is used as the index to
FM mode.
is used as the index
Bluetooth mode.
to check how the other pairs are performing or doing. Um, so we have seen that the DXY is currently looking to go bearish. Okay. DXY is currently looking to go bearish. So let's say if we want to find an entry on the DXY, let's say we want to trade this, want to find an entry. If we want to find an entry on the DXY right now, okay, now we have head and a shoulder pattern formed, evening star formed, everything is aligning perfect. We are below our higher time frame area of interest or PSR, which means we should be selling. Okay. So how do we participate in this market at this level? Okay. So um two things. Let's look at this current leg from top here to down here. Let's look at the trend. This point to this point. So from here, we can see that the market is making low, lower high, lower low, lower high, lower low, lower high, a little lower low, and then a lower high, but I won't count that. So I'll just put lower low, and then currently we are seeing, because this has been taken out, so we are seeing a lower high. Okay. Um, so we should expect a new lower low to be formed. Okay. But the market would also want to reach out to this area, this last lower high. Okay. This lower high. The market could reach out to this place for a retest. So we have to also bear that in mind because it's been bearish since after breaking this um, double top neckline. Broke the neckline and retested here and broke structure again here. Okay. Just did a small or light retest here and dropped. The market might want to move up again and retest here, but we shouldn't expect this high to be taken out. Okay. But even if the market is not going up there, we know we are bearish based on the current information we are seeing here. Okay. So let's say we want to engage in this market and we know that we will expect the market to reach out to the buyers that are down here. There are buyers down here. So this is where the market might want to get to. Okay. So with that in mind, let's say we want to engage in this trade because the trade is already playing, but we want to still find an entry. How do we find an internal area of interest within here? So I will mark this area as the most current area. I will mark here. Okay. And when I mark here, I mean, I will look at here as sellers in the market. Okay, so sellers are here. Sellers are here because when the market hit this low, small low here, it pulled up, and the sellers that came in here pushed the market down. So which it means that currently sellers are at this level. This is the way you should be. You should understand the market. Okay, you must think of the market this way as sellers and buyers pushing the price up and down. Think of the market this way. Don't use difficult concept to complicate things. Okay. Look at the high point, low point, and think of those points as buyers and sellers coming into the market. So if this is the case, sellers push the market from here down, then we see that the buyers also push the market point. The buyers also push the market from this point up. Okay. So they push it up here, and the market they pushed it up here, and price comes down here again. And the buyers have been able to push it up again, and its price reached out to this area where sellers are assumed to be. Now, the moment price got to this area where sellers are assumed to be, we can say that this is an area of interest because previously sellers were here and they pushed the market down. Now the market comes back to there again and we can see a reaction. But what kind of reaction are we seeing here? Please, who can tell me this pattern? What is this pattern?
I think it is a morning star or evening
Even
star, something like that.
evening.
This is evening star. So evening star
Yeah.
has formed at area where sellers are in charge. Okay. So what does it tell you? It tells you that sellers are preparing to control the market
Okay.
again. Okay. To control the market again. So we see an evening star formed at this level. Then the market now goes up and it's trying to retest this area. So now let me scale to this is the 4 hour. Let me scale to lower time frame. Like let me scale to 30 minutes and see what I'll find. So I go to the 30 minutes here. What do I see? So study here closely. Sellers are up here and the market gets close to the sellers, but we see an evening star formed. Okay. Now watch carefully. Prior to this area, let's even look at the pattern that is being formed here. Okay. One, I can see that there is a high point here and there is a higher high, and this area looks like a lower high. Can you all see that?
Yes.
Can
Yes,
you
sir.
all
Yes, sir.
see? Can you all see what I'm saying? High,
Yeah, yeah, yeah.
higher high, lower high. So
Yeah.
this is me using a group of candles that have formed the a point. Okay, for evening star, you can use 3 candles alone form the evening star, but I'm using a group of candles to form the evening star. Okay, so what does the evening star have? Let me go back to 4 hour and let's look at the evening star pattern we saw. The evening star formation normally has a high, higher high, and a lower high. Okay, you can see it everywhere. Anywhere you see evening star, you will find a high, higher high, and a lower high everywhere. Okay, a high, higher high, lower high. Price sweep it up and then engulfs. Okay, a high, higher high, lower high, evening star formation. Okay, so now I am using group of candles to form the evening star, and this is what you must be doing. Okay, this is what you must do. You are looking to sell, you need to see evening star before you sell. Okay, at your area of interest. So I see there is a high point here, price drop down, then it came up, it makes a low point here, price drop down again. Now I can see there is a high point here. Okay, I don't need price to go above this second high point. Okay, because the moment price go above this higher lower high point and it forms a new higher high, the evening star formation is in jeopardy. Okay, so I need price to stay like this and keep dropping for my evening star formation to be perfect. Then I can jump in the cell and be confident. Do you guys get the point? Good. So this pattern, high, higher high, lower high, is also what we call the head and the shoulder. Okay. So for example, if I take this point, I will put my left shoulder here, then I'll put my
Ah,
low point here. I'll put my head here, and I'll put my neck area here, and I'll put my right shoulder here. Then price came down, crashed this low, which is like kind of a break of structure. After that, it has pulled back to retest the right shoulder, which is a perfect head and shoulder formation. Normally, the market could move up and crash the right shoulder to take liquidity above it. Okay, so it could either push up to take liquidity above the right shoulder, or it will not just do that, it will only retest the right shoulder and drop. Okay, so that is the current struggle happening on the DXY now. Okay, and this that is happening on the DSY, the opposite version of this is what is happening on Euro USD or GBP USD. Because if the DXY is going to sell, Euro USD is going to buy. They have a negative correlation. Okay, so now that I can see a head and a shoulder formed on DXY and trying to confirm a sell, let me go to Euro USD. So look at Euro USD. Okay, look at Euro USD. The current pattern we have. Look at Euro USD. This is 50 minutes. Let me go to 30 minutes. Please, can you mute if you want to talk? If you want to talk, mute, please. Um,
Hey, sorry, sir.
yeah, it's fine. Good. I think people are having bad network, but we are good. So the flip side of the DXY is the Euro USD. So for Euro USD, I could see we have a left shoulder, price hit this level. It's making a head, it hit this area. It's making a right shoulder. It goes up to crash the right shoulder. Goes up to crash here. It's dropping back to retest the right shoulder. So two things. It's either it sweeps liquidity below the right shoulder before it pushes up, or it just retests the right shoulder. These are the two ways that I have seen the head and the shoulder play out always. Okay, when the right shoulder is formed, market will now go and break structure. then it will have to come back and retest the right shoulder for the bigger move to happen. Or it will have to sweep liquidity below the right shoulder. That's the way it happens. So if it turns sweeping liquidity below the right shoulder, you have to pray that it doesn't take the head out. Because once your head is taken out, you die. It means the pattern has failed. So where price is right now is a very crucial moment. Okay. And you could see this is the setup I framed from yesterday's class. I mean, 2 days ago or something. I had this down. And my anticipation is that I don't need price to take out this low. Okay, I was having something like this, another bearish head and a shoulder. I don't need price to take out this trend line. And you could see that the whole of today, if you check the price action, London session, New York session, CPI, everything has respected that trend line. Okay, so I don't need price to fall below the trend line. Even if it falls below it, it must push up. But this head must not be taken out. And the head is exactly where my stop loss is. Because I understand that with the head and shoulder, the moment your head is crashed, you are done. So once the head is crashed, I will now be looking for sales. But I'll wait for price to retrace back up. Then I'll find sales. The same thing is on the DXY. The DSY is supposed to sell from here. If this sell does not work and it pushes up to crash the right shoulder or crash the head, it means the market wants to keep going up. So I'll wait for a retest and then it will go up. Okay. And if it's going up, it's likely it might want to reach out to this zone for a retest rather here, which is perfectly fine. It makes sense. Are you guys getting the thought how everything is adding up? So from this demonstration alone, you can see that the DXY is the opposite version or side of the uh, Euro USD. Euro USD is trying to buy or reverse to go up. DXY is trying to form a 30-minute bearish candle. Okay? It's trying to form a 30 minutes bearish candle. If it stays like this and DXY drops, Euro USD is going to buy. So price is still at entry. Those of you who wants to do the $10 project, if you have your account, this is a good point for you to take 0.001 or 0.002 entry. I'm not saying it's going to play out, but if you look at the entry here to where the stop loss is before the setup will become invalid. If you take 0.001 or 0.002, this will not take you even $5 loss if you hold it. Okay. And if it comes to loss and you think you cannot hold it, please close. That's the caution I'll give you. But if you take the entry here and it is able to push up and get to the TP up here, you are going to make over $10, which means you are growing your $10, risking like $5. You are going to make maybe more than $10, okay, on this trade. So if you are interested in the trade and you want to take it on your $10 account, please take your entry now. Okay, take your entry now because price is at the entry. Okay, I'm not saying it will work out, but if it fails, what we are risking is smaller. Based on the loss size, I'm encouraging you to use on your $10. So take either 0.001 or 0.002. And also know that we are out of session now. New York session is over. So Asia session, getting into like Asia session, the spread is going to be big. So you must beware of that. Okay, the spread is going to be big. You must beware of that. With that said, I think I'm done. trying to apply the 3 steps for the trade to understand the DXY. So if you have any question, please ask. If not, let me invite any of you who was able to choose a pair. Let me invite you to mention your pair and let's look at it real quick with the few 20-25 minutes left. Okay. So we are I think I brought the idea that let's grow $10 to $50. If you want to take part in that project, I am already, let me even check if I'm already in the trade. I am already in the trade, but I took an early entry and I'm in a loss. Okay, because I took the entry from here. I took the entry from here when the market was here. So this moved to the upside here. I caught it, but I was in like $3 profit and I did not close and market reversed and it has put me in a loss now. Okay, so I was in profit before. Now I'm in a loss on the $10. Let me send a screenshot. I'm in a loss of about close to $2. I want to send a screenshot to the group so that all of you will see my loss. But I went into $3 profit. I went into $3 profit. Let me see, where is the screenshot? Okay, good. So I just posted the screenshot in the group. You can check it out. So this is it. This is my $10 account I'm using to take that trade. I went into $3 profit and then it all came back down and I'm in a loss, 1.49 right now. So I will close the trade if the loss get to $5, which means I'm willing to lose $5 on this $10, 50% of the account. If it gets to $5 loss, I might close one position and leave the other because I trust that the trade should play. But if it keeps pushing down, and I'll be monitoring, once the right shoulder is taken out and price is reaching towards the head to crash it, I might close. But if the market comes up later, let's say lending session, and it stays above the entry level here, I'll jump on the trade again. Okay? I'll jump on the trade again. So that's the way I want to trade it. But for now, I'm in the trade and I'm in a loss. Okay. So let's go back to um any questions how to apply all the 3 steps. Who has a pay? Please, quick. Let's be quick. The time is moving. Let's respond and then
USD card.
this is the
Let's talk
last session.
about
What?
USD. Let's USD card.
USD card. I've not analyzed this pair before. USD C. Oh my God. USD card. USD card. Okay. So this is USD card. This is the 30-minute time frame. Let me first go to daily. Okay, so let me start from 1 month
Monday.
so that I can see the whole thing.
Mhm.
This is 1 month. Wow, I didn't know there is information down here. Okay, so this is 1 month.
Yeah,
This is 1 month time frame. It looks as if the market was bearish before.
Mhm.
Then the last important high was somewhere here. Can you all see? We have to move fast so that I can
Mhm.
just do it quick. The last important high was somewhere here, right? Can you all see that? High,
Mhm.
lower, low. So from that high, the market was able to pull back up and crashed this high out. This move means break of structure or intention to go bullish. Okay, the last important high after making this low has been taken out. So what am I trying to do? I'm trying to establish who is in domination. So sellers were in charge because we're seeing low, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, and then we get a higher low. Okay. Now, after getting that break of structure, that this gives us the intention that the market wants to reverse. So it gives us a valid range. Let's look at the range. From this low to the top here, the market retraced up to about 78, 61, 100% and stayed above the 78 and boom, made a way up. Which means that now we have gotten a second break of structure because we have the next lower high taken out again. Okay. This high taken out again. Okay. Okay, so now we have a second break of structure. What is the new higher high? Higher high. We have this high point that it made. And what is the most current low? The move started from down here. So this is the most current low. Okay, so this is our current range. We have this low up to this high. Now, when you have something like this, you might want to wait for price to drop to where? Discount. Anything below 50%, then you can buy. But sometimes this will take a long time before it happens. As you can see, this is a monthly time frame because you want price after giving you a second break of structure, you want the price to come to 78.6% or 61.6% before 61.8% before we get a buy, a bigger buy again. Do you all get what I mean? Okay, but at least the market was able to move to 50%, which is equilibrium. And this spot was also a good place for us to have bought. I mean, here, this was a good spot because sometimes the market will not give you discount outright, but it can give you equilibrium, which is what it gave here, 50%. So the moment you saw 50% here, boom, you can also take a buy if everything, the entry confirmation and everything aligns. So let's say the market did not come to discount, but it came to equilibrium. So let's say at the time that we are doing this analysis, the market is just here. All this information here has not come yet. Okay, so let's see. Now, we know that we are waiting for market at discount because we have a second break of structure and the trend has changed from bearish to now bullish. This is so we know buyers are now in domination. Do we all agree to that? Good. But inside, when price now dropped to 50% here, what do we realize about any area of interest around there? So let me extend this area to here. Let's see here. Okay, so now, wow, we are just left with 10 minutes. What do you, okay, we have tomorrow. What do you say about here? B, this point. What do you think happened here? I put a B here. Hello?
Yeah, buyers.
Yes,
Yeah,
buyers push the market from this point up, right? So how do we know buyers will still be here? We will know by waiting for the market and see what will happen when the market comes back there again. Now, market go up. The moment it came back there again, what happened here? Can you all see? They push it up again, right? Now, the second time. How do we know buyers are still there? We still have to wait. The market goes up, it comes back there again, and then we see a reaction again. So we want to be buying here because buyers are already here. Do you get my point? So this becomes an area of interest. The trend is now bullish, but we need an area of interest, and we have found one. Okay, but at the area of interest, what are we going to look for? Morning star. Okay, we want to look for 3 candles. A low, lower low, lower high. This is the pattern. This is the pattern. You want to see this low, lower low, lower high, engulfing bullish candle. Okay, once you see this at the area of interest where buyers are, you are good. Okay, so on the weekly time frame, you must wait for this to happen on the weekly time frame. Once this happens on the weekly time frame, you will be good. Okay, but one thing also is that you know that anything above this point where the buyers engaged here previously, anything above it is for buyers. Okay, anything above it is for buyers. Okay, so this is where you now find an entry. So let's move to daily time frame. Daily time frame, yes. Good. You can see it clearly now. Okay, market just dropped to the place where the buyers are, boom, it responded. But at the end of the day, it is still at equilibrium, 50%, which is a good spot. So this trade didn't become difficult. This was an easy catch. We have a bullish market and we have an area of interest we spotted here, 1, 2. The third time it came here, there was no struggle. Okay, so now we also have the top here. And what do you think is happening here? Sellers are in control here because they push the price down here. Here too, they push it down. The third time, what do you think they are doing? They are still doing what? Pushing it down. Okay, so there is a high probability that this market is going to drop. Let me go back to the weekly. There's a high probability that this market is going to drop from the top here. Okay, sellers, sellers, sellers 3 times, buyers, buyers 3 times, sellers, sellers 3 times. There is a high probability that the market is going to drop from the top here down to crash the 50% into deep discount before there will be a buy. Okay, why? If the dollar index is selling, it means the dollar is weak. So USD CAD, USD is the first is the base pair. So if the dollar is going to be selling, then USD CAD, dollar CAD will be stronger. So dollar will fall. So there is a higher chance the dollar will be dropping. That's my analysis. Is there any other pair? If the meeting closes, please let's continue tomorrow. Okay, sorry, I cannot go to the smaller time frame, but we can do that. If you want me to go to the smaller time frame on USD CAD, I can. Now sellers are up here, though we are bullish. Okay, but we can see sellers are active at the top here. But I want to see any reaction. I can see a high, a lower high, a higher high, head and a shoulder formed clearly. Then I can see a neck hit, right shoulder formed. Price is trying to break the neck. This is it. So if price is able to break this trend line or neck line head of the head and shoulder, price is going to fall. It's going to drop. Simple. It's going to drop first to 50% here, but I anticipate it should break it down to deep discount, either 61.8% or 78.6%. Why? Because we have a break of structure. So price must come to discount so that the smart money traders can participate. They can push the price up big. That's the concept. Okay? Any question?
Yeah, no problem.
Any question? Any question? So
Yeah, I
guys,
have a question, sir.
what do you think will happen if this neckline or trend line is not broken? It means the market will keep going up. Okay, so we need the neckline or trend line to break so that it will fall down. And the first TP is where the buyers are. This place down here. So it's simple. This is an easy pair. This pair is not complex at all for me. So you see how you can view everything clearly from higher time frame. It makes sense. Now, if you go to 30 minutes, you have the bigger picture. So 30 minutes, you only be taking your time to make sure, because you can't trade from the weekly, but you can trade from the smaller time frame. You can take an entry there. Okay, so we are waiting for this trend line to break and we'll be selling. But up here, you can still find the structures, go through the same procedure to get your area of interest and get a good entry and keep to sales. Okay, so that will be it for now. What other pair?
Yes, sir. What about GBP AUD?
GBP AUD.
Yes, sir.
G. Sorry, G. So please, if the meeting closes, we will end here and we'll continue with GBP AUD tomorrow, same time. GBP AUD. And I'll send the recording to the group. GBP AUD, British pound, Australian dollar. Good. The same scenario. First, I would want to go to monthly to see what everything looks like before I make any decision. So monthly time frame, just judge or look at it. Okay, the market was like bullish here, then we have a change from bullish market to bearish at this point. Okay, bullish market here, price drops down, takes the last important reference low, retested, broke it, retested. So you can see right from here, sellers are here. S. Okay, sellers are here, right from here. Sellers are active here. Sellers push price down, price go back again, sellers push it down. So I'll draw this area. Anytime price gets up here, expect a reaction from the sellers. That's the first thing I'll say. Two, we can see that we have a bearish market now because from this point, we are now getting break of structure, up, another break of structure, market goes up,